Alright, what's up, everybody? Man, where my shit at? Hold on. What's this? What's the hotkey? You know hotkeys? Anyway, forget this. This is my first video, man, so I'm trying to get used to this. Anyway, what's up, y'all? Alright, so look. What we're gonna do is we're going to understand market structure through back testing it, right? Before I begin, I'm not a financial advisor, so don't ask me nothing about financial advice. All right. The next thing is that I did not make up these concepts that I'm about to backtest. These concepts came from DTFX. So shout out to DTFX. Right. If you see the video and you like the video and you want to learn more, like some advanced level stuff, go to DTFX. Dave teaches. All right. So look. From what I understand about market structure, right, and hopefully this helps you, is that market structure is the highs and the lows. So, for example, you have something like this. This high creates this low, and then this low runs this high, right? So now what happens is that a zone is created, right? The area left behind is the zone created, right? Then what will happen is that you will see price trade down into the zone. Let me do that. Yeah, you'll see price trade down into the zone and then trade back out, right? And it will keep doing that until you see price run the previous low, trade up back into the range once again, and then trade down. So this would be the zone left behind going down. Let me just call it, I don't know, this, right? So this is an uptrend, this is a downtrend. Now this is elementary, basic market structure. Now obviously in real life, it don't look like that. In real life, or on the chart, it look like this. It's zigzag, it's right, it's all over the place. So what we need to do is to make sense of this. Now if it's zigzag all over the place, you can still follow the structure by what? Trailing the low, the high, the low, the high, the low, the high, the low, right? We can still trail and map out structure even though it messed up, right? So now what is really important is that apart from knowing all that, what you need to understand or appreciate is that there's something called a swing count to, right? Now this is where you see these swings 1, 2, 3, 4, 5, right? Usually price moves in these swings, 4 to 6 swings, price reverse. So what happens is you count your swing, you can anticipate price going the other way. So what we're gonna do is we're gonna back test all of this, right? You should do this on your own as well and see this happening during back testing to appreciate this so that you can trust it when you're doing the live testing. I promise you, if you dedicate yourself to this, this will change the way you trade, right? For the good. All right, so what we're going to do is we're going to back test. This is not a live market. This is a back testing session. Once again, I'm not a financial advisor. This is not no live market. I'm not telling you how to trade and whatnot, right? So the date is September 16, 2025, right? This is the 1 minute. No, my screen is small, so what I normally do is just get a decent picture, right? So I go to the 15-minute and I get to see what's going on in terms of structure, right? Now, for me to, if I'm trading in real life, you can see, look, 1, 2, 3, 4, right? Structure, we have a little structural break, but that's on a different time frame. So you go so boom, one, you go so 1, 2, 3, 4. Then we said 4 to 6 swings. Price, reverse, bang, run this low. Didn't it run this low? See, the low get run. Trail of highs and lows. That's what DTFX say. And then boom, it run it. Right? So what we want to do is let's dive into a lower time frame and see how this is carried out on a lower time frame, right? So what I like to do, I like to pick a range. I like to pick a good range. Now, normally when I could use the daily candle. So all right, let me show you this. So this is a live one right here, right? This is USD JPY, right? Now from here to here is a daily range. What I did is I took a candle and I got, this is the range from the daily candle, right? Got quite a few good trades off of this. But the problem is if I go to USD CAD, because it's in backtest mode, what will happen is that it'll fast forward some stuff for me. All right, let me show you. So this is the daily, right? We'll go on the daily chart. This is a nice fat daily candle, right? Oh man, they're making it easy for us right now. So this is the previous high, previous day's high, which got run. Let me backtrack. Each candle represents a day. On the daily, 4 hour, each candle is 4 hours, all the way down to the 1 minute, right? So it takes a day to form this candle, right? Boom. So we have this low, this high that got ran, right? And we have this low that got ran. So what price did is price ran this daily low, traded up, ran the daily high. So what that telling me? Based on market structure, it is telling me that price might do this, come down, and then come back up. Damn. Price might come down. Price might come down and come back up. That's what I am anticipating. But remember, this is a daily candle. This thing going to take long it might happen. So I want to make some money while this is going on, right? This is just my anticipation, right? We're really going to trade what we see based on structure. So anyway, let's go into some lower time frames to where we can actually execute. All right, so what I like to do is I like to get my range, my daily range is lined out, right? So this is top of the range, bottom of the range, right? We'll go into top of the range, bottom of the range in a while. You see what I mean? You see what I mean? When I go back, this candle is gone. So it's almost as if it's predicting that, yo, you know what I'm saying? So what I like to do is I like to go to the 15-minute. This is for back testing. I like to go to the 15-minute and I like to pick out a good range. So there's this tool called this. It's somewhere in here called date range. And I usually just run the high and low. 12 hours is cool. That's a 12-hour range right there. This from here to here. All right, this is a day and 12 hours. So let's just use from here to here, 1 day, 1 hour. All right, this is a daily range, right? Day and an hour, daily range, right? So what I'll do, I'll just do this and I'll do this. That way I know that I'm not really cheating, so to speak, right? So I go back to, so I see the 15-minute, right? So let's see what's happening. Let's follow structure. Boom. You have a low, you have a high, right? A low gets run, the low gets run. So this is now a protected high, right? Price trade back up into the protected high, right? Now you see this shift right here, and you would say, yeah, it break. But once it break above here, this high gets wiped out. This swing is no longer valid, right? But anyway, just follow me. This low, put in a new high. So this low, put in this high, and then it swing down into here. So that's 2 swings, right? And then what happened? Swing up, swing down. It's 3 swings, right? Then it swing up again, and then we don't have a break until down here. So that's 4 swings, right? So we have a range within our range. So we have, this is the range that we're looking at right now, from this low all the way up here. This is our range, right, that we're paying attention to, right? Now, we don't know if price has reversed yet. We just know we have 1, 2, 3, and let's just say 4 swings. Actually, this is the high that ran the low, but I want to take the higher time frame. Inside this, you have all kind of little swings going on in here, little up and down. So like, all right, let's look at this. You have a high on this leg coming down. You have 1 swing, possibly 2, 3, 4. Guess what happened? Price start reverse. Then it do it again. Sweep the low, right? So you have to, it's up to you to kind of like basically and realize this during your practice. All right, so we have 4 swings. We have a little range down. We have a range right here. We have bottom of the range. We have top of the range, right? So as we can see, price left the bottom of the range and is heading up to what? The top of the range. That's what we anticipate, right? So we have a high here. Paying attention to this high. This is 5 minutes. Can count the swings in here if you want. Well, if not, if you want, it's mandatory that you count your swings. So let's count our swings in here, or just follow the swings. So this is 1 swing. This could be 2nd swing, 3rd swing, maybe a 4th swing. We don't know. So we're going to follow structure up here till we see a structural break and see what happens, right? Let me just move forward some. Right, this is 4 swings. 1, 2, 3, 4 swings. Right? We have a zone up here, potentially. Right? But we also, remember, we have the larger range, which is up here. Right? So just because I draw this zone up here don't mean that price is going to just like, decide for just bust through this zone, right? We got to be careful, right? We got to read and just go where price is going based on trailing our highs and lows. Anyway, we have 4 swings. Inside this swing, you also have swings, right? 1 swing, 2 swings, right? Trade up into the zone. Get some rejection. All right. Some people take trades off of here. All right. Look at that. Reject, reject, reject. But it did not run. First of all, it did not run the low on this leg here. But it did not run this low right here, which is a higher time frame swing, right? Keep following it. Keep following it. Keep following it. What that look like? Another swing. So we have 5 swings, right? Keep going. Inside the 5 swing, the 5th swing, what you have? 1 swing, 2 swing, 3 swing, 4 swing. All right, that's inside this swing. What's that? 1, 2, 3, 4 swings, right? We're at the top of the range. No, sorry, not yet. We're approaching the top of the range. We're at the top of the zone. There's also a zone up here, low, high, run all this low. So now it would be best to look for shorts up here, but we're just following market structure right now. We're not talking about I shouldn't even be talking about zones. We're just talking about following how the market moves, right? How much swings we have in this leg again? I should have marked it out, but anyway, we have one swing, that's two, that's three, that's four, equal highs, maybe this low get run. But just because this low is not a part of structure, because this low did not put in a high, so this is equal highs which run the low, right? But you notice as soon as the swing count happened, the price look, let's see how it start, look like it want to reverse. This low is protected as far as this swing, this time frame is concerned. This is a protected low, right? So some people might even decide to draw a zone here and probably try to take a trade there. They get a little bit of money here, but you're the upper part. Man, I shouldn't be talking about ranges right now, but anyway, I don't want. I'm gonna probably make another video. This is just a little rush video, right? Boom! Guess what happened? The low gets run, right? The low, the protected low, gets run. So what that's telling us? That's telling us that price might reverse. But remember, this market structure is filled with time frames. This is a smaller time frame within this large time frame here. So anyway, this low gets run, and you have your little zone here, and you're approaching the larger zone here. You're approaching the larger zone here. So guess what happened? Trade in here, you get a little move up, boom, get some bread, right? Trade up. Will it reject here? Possibility, we don't know. We have a market structure shift on the lower time frame, which doesn't necessarily mean price is gonna go all the way down, but you might get a little rejection from it. Capitalize. Ooh, somebody can see, get cooked, because the smaller time frame. Now, this is a 1-to-1 here, trade up, trade down. You can live off of this, but as far as holding it because you have a small market structure break, nah, let's not do that, right? The longer moves are up here, right? I'm talking too much, just man, this DTFX thing is so cool. It's just like getting very excited just even talking about this. Right? I'm helping myself too, guys, back testing. I keep proving these concepts over and over and over again. And the more you prove these concepts over and over again, it's like, you start trust them more and more and more. And then you get more confident, whether it is demo or live, you get confident in making these decisions. Now look at this. This is also another phenomenon that I'm not gonna go into, but you get some narrative going on up here. Equal highs, right? Possibly run the lows, right? So we go, so boom. All right, now we've ran it. So guess what? This is what? Swing number 6, maybe? If we're counting correctly. 1, 2, 3, 4, 5, 6. Yeah, swing number 6. What? And we guess where swing number 6 carry us? In a zone. And guess what? Top of the range, baby. Guess what? Protected high on the big boy time frame. So what do you think might happen? I don't know. We just need to keep in mind that there's still a higher range that, you know what I mean? Still a higher range. So we'll go boom. What just happened? We're looking for, this is also structure here. Remember, this leg from this swing has swings in it too. So just because we see this, we're just short. We have to like count the swings also. So we'll have 1, 2. Let me see. 1 swing, 2 swings. This is 2 swings. This might be 3. This might be 4. Or you could just say 1, 2, 3, 4 swings on this leg coming up from this swing right here. Right? What does happen? Run the low off this little swing in here. Run the low. Right? This might be I prefer this low to get run because this is the low. This low is a higher time frame low than this little low right here. This little low get run. Even though it put in the high, he's like, don't trust it. Alright. I would wait for this low to get run before I decide to say, yo, we're gonna short. But some people like raw dogging it. Some people get lucky. Some people don't. It might not even run the low. It might decide to, man, we can go higher. It's not up to us. So see, the low get run, right? The low got run. So now guess what? Little zone right here. Put in the blue. You should even count the swings on your way down here. Right? Count the swings on this leg. This is 1 swing. Bang, bang, right? You have 1, 2, 3 swings. Right? Run the low. Trade up. Failure to put in another low. Right? If you were taking a long from here, you could say call this the bottom of your range, take a long up there to facilitate or whatever. Right? But what that tell us? The low got ran. Price decided to go the other way. Because we're following market structure. Alright, so now pull back up into the zone. Right? Look at this. Look how the short is so clean. This can be anywhere from a couple $100 to $1,000. Look how the short clean. Cause what? We follow market structure. Wait till the higher time frame. And when I say higher time frame, which is relative to this, wait till it get run. Trade down. Count the swings on the way down also. How much swings we have? 2. 3. Reverse. Normally I'm out right here. I'm good. I don't need nothing else. Right? But you count your swings. Trail your highs and lows. Look at that. Didn't I say this is a longer trade to hold? Look at that. This is a boat. This is boat money. Count your swings. 1, 2, 3, 4. Right? Remember, in the grand scheme of things, 1, 2, 3, 4. We just have we you know what I'm saying? And remember, we had said that when we looked at the daily low, there's like a flip happened. So I'm cool. I'm not expecting this low to come all the way down here because of what structure is telling me. Structure is telling me what? I trade down these swings finna go. Not only that, you also got swings up here too. Right? You also got all this crap up here. So price probably due for a big push up in those levels. So I'm not gonna hold this thing all the way till I dead. Right? Look. You hold it. Ah, what? Somebody eating good. Remember, we have this zone right here, but this zone already mitigated. I'm not going through zones right now, but just bear with me, man. Bear with me, right? So somebody who decides, say, yo, they're holding it. They eating good, but look, they're going back up in here. It'd be a good time to let go. This zone here, getting peppered. Right? See, holding it. If you were holding it, in order for it to come all the way down here back, you'd have been dead. Why? Because of the swing count. So, ladies and gentlemen, that's all that I have for today. I ain't really trying to go too much into it. But yeah, man, market structure is the key. Make sure you guys practice this. Look at that top of the range, the daily range or the higher time frame range. You see what I'm saying? That's where it's going. Make sure you guys, well, that's what it look like. Make sure you guys do y'all thing. Look at this swing count right here, just to show you something. You see how this swing is so large? You see how that swing is large? Remember the daily, what we said earlier? That price ran this, trade up, and trade back down. This is what's happening right here. It's just because when you, as I said before, when you go to this, it doesn't form yet. But this is what's forming right now. Run this, trade back down, goes. Let's see what happens. Let me just turn this up. That way we just price. Price making its way up. Remember, this low has not been run yet. So just because it's doing this funky stuff in here don't mean, oh, it's going to drop down and not going any higher. No. Whoop, I was wrong. It ran, whoop, fake out. Anything can happen in the range. Doesn't this look like the big white candle right here? And then it trade back down. This is the wick of the white candle. Trade back down. What does this represent? A zone. Right here. Bang. Guess what? We might go down in here. We might go up here. I don't know. Get some ranging going on. Computer screaming right now. This is in Asia, so price, ain't really moving that much. Fast forward to New York. Well, 9 p.m. This is the Asian session. We start get kick up. This is the big white candle that we saw. This is the black candle that's next to the white candle that we saw. Trade back down, wick back up. Now we can wait here all day, but let's see. One swing, two swing. So if you really want to follow this, you can follow the swing count. This trade up into this. The low got ran, so this swing get ruptured. So you just follow this new swing count. This is one swing, come back here, run it here. So this is two swings. So this is your second swing. This is your second swing right here. So forth and so forth. We run this high. We run this high. So not only we have two swings here, but guess what? We have a big zone from here. This thing is tripping. From here to here. So let's see what happens. bottom of the top range, so to speak. Look at these swings in here. You count all the swings. You count. Count swings till you're blue in the face. The larger swings is in control. The larger swings tell you what's going on. The smaller swings, you might see the swing count get this and not hold true. You might get some 3 swings and flip. We're not worried about the smaller swing counts. We're worried about the larger swing counts. Notice how the larger swing counts is really like telling us what's going on. 3 swings so far. Price might look like it still might go higher. After the 3 swings, then you probably anticipate it coming back down to here and going back up. Coming back down to the bottom of the range, going back up. We don't know, but this is, it's not good to predict too far into price. Stay within your range. Don't try and predict what's going on in the larger range, because you might get tripped up. That used to mess me up all the time. I'm here, but I'm worried about what the hell is happening all the way over here. Oh, you're going to come up and you're going to turn. Nah. Just stick to what you're doing. So usually on 3 swings, kind of just back off and see what price is doing. I won't really try and engage too much. But from here, it looks like it's going to create another swing, because this zone here is getting peppered. Mitigation. Let's see. Yep. See? 4th swing. All right, let's see if it's going to reverse. We have 4 swings. Might put in another swing and then reverse. See what it does. Yep. Guess you can call it the 5th swing. All right. The low that put in the high. Whoop, got ran. Oh no, what's going on? Looks like we're reversing. To where? I would not anticipate that. Instead, I'll just count the swings. 1, 2, 3, 4, 5, 6, 7. Right, this little swing get run up here, but guess what? That's just some small time frame stuff. This might be a fake out to come back down. Yep. They call the concept toilet paper, people. It just means just because you see it shooting up based on what you anticipate the time, don't mean you must just jump in right away. Right? We're following structure going up. 1 swing, 2 swing. Might give us a 3rd. And inside this swing here, you have what? 1. Kind of hard to read right now. 1. Let me see, what was this? 1, 2, 3, 4, maybe. I don't know. It's Asian session. Don't really trade Asia a lot. Usually sleep around them time. 3 o'clock in the morning, London session. 1, 2, 3. Hold on, let me count this thing properly. 1, 2. Oh no, see 1, 2, 3, 4. 1, 2, 3, 4. 4 swings. No, some of us will be like, all right, this is a zone we can use to make some money off of. But I don't know. Yes, we're at the top of the range, but I wouldn't like hold it. Because I want what we said, we wait until a low get run, right? No, this is a low because this is another swing. 1, 2, 3, 4, 5 swings. So we have 5 swings. Bang. Right? And then what happened? What happened? Some ranging. A 6 swings. Wham! So if you think I'm lying, backtest this yourself. But 6 swings. Now guess what? The zone is formed. The zone get rub out. Maybe it's a smaller time frame shift. Yeah. Got clapped on that one. But then, as we said earlier, we don't really anticipate. We didn't anticipate. Let me see how many swings we got. 1, 2, 3, 4, 5. We ran this low. We didn't run this low. So we shouldn't really anticipate things going all the way down here. Could we have gotten a short through here? Probably not. Unless you're like, yo, you see the equal highs and you see the low getting run. No, just because we fail, it don't mean that it's not time to short yet. We're just early. So we wait. Because we have the swing count on our side. But we just wait. 1, 2, 3, 4. These swings get destroyed. 5. These swings are no longer validated because the low get run. Right? It doesn't mean that wait until something is taken. All these stuff I don't want to talk about yet because I want to just market structure. You know what I'm saying? Market structure. So this is not. Yeah, you can get a little short here. You can get a little short here. But when I drew this big zone, I said that don't anticipate this to bring you any money, which is inside of here. So this is not a good zone to take. Now we can anticipate some shorts because guess what? We ran this high, which is a part of structure. So this is one swing, boom. This is the second swing, bang. So if I can just draw this from here to here, give us a better interpretation of what's going on. So now I can anticipate some lows getting run. But I will only anticipate it until this low put in this high, this low get run. I don't know. I see a range, which is suggesting price is getting ready to go the other way. Get that fake out. There we go. Get that fake out. People think, oh, it's going all the way up. Bang. This is a low. Because this low put in a new high. Some people might say, oh, equal highs, equal lows, run the high. No, because you're at the top of the range. So we're going down now. I'm just following market structure. No, I would take this as a short. One-to-one money. Bagged. Right? I'll be out that trade already. So I'll be out that trade already. But this is one swing going down. Look at that. See? If you held on, you'd have gotten killed. This is equal highs. Because if you look at the 15-minute. Oops. Oh, yeah, it's a candle closure. All right. So that's another swing. So look what we got. Let's look at structure. And look what we got. This is one swing. Large swing. This is what? Two large swings. So we can anticipate price coming down, giving us a third. Let's see what it does. Let's stick on this. This is a 15-minute time frame. Let's see what happens. It's not ready yet. It's not ready yet. We don't run price. It's not ready yet. It's not ready yet. It's gone. It's like, nah, we no longer on that time frame, buddy. Sorry, we on this time frame. Which is okay. It's okay. Because the swing counts are still being created. Remember, there's just two swings. Take our look at scalps. This could be our third swing. Bam. Another one. Bam. Right? We run the high. Run this high also. Come back down. See? So we would have gotten some good trades. And then we also would have protected ourselves from bad trades also. Right? So anyway, I'll probably do a better video than this. This video was kind of rushed because I'm kind of tired. Look, it's creating the third big swing now. See, this is 1, 2, 3, probably 1, 2, 3 on this small swing. This is the third swing right here for the 15-minute time frame candles. You see that? 1 swing, 2 swings, 3 swings. Right? Probably go up and make another one. But yeah. Anyway, y'all. Talk to y'all later. Hope y'all enjoy the video.